Welcome to the C-Suite podcast with me, Graham Barrett. I'm here in Frankfurt for Sibos, the global financial services event. We're producing these episodes in partnership with LSEG Risk Intelligence, who provide a range of solutions to help organizations effectively manage risk and reduce fraud. I'm going to be sitting down with a number of the key speakers and attendees here on LSEG's booth to gain a real snapshot of the key talking points here at the event. I really hope you enjoy these conversations. Pleased to say that I've been joined by Tom Golding, who is Chief Operating Officer at LSEG Risk Intelligence. Tom, thank you for joining us.
Good afternoon.
Yeah,
great to be here.
No, it's great to have you on the podcast. And listen, I know you've spent many years, may I say that, in the payments and financial crime space. It's such a pace of change at the moment, isn't there? Why do you think this is, and how do you evaluate that pace of change?
Yes, you now make me feel old, but no, the one thing, especially when you come to an event like this, is, over the years that you've seen it, is the real change in that kind of feeling of pace. That's the one thing. It's pace and complexity together that you really see. Look, the payments landscape itself has rapidly changed in the last 5 years. We're seeing, greater kind of volume and operational complexity coming in, which for us as consumers is where our expectation is. We're wanting to have more kind of timeless, faster and seamless payments that go along the way. So, you've got that drive of client expectation, you've got rapid innovation in this space, and we've got new offerings, and we've got new asset classes, and that kind of all comes together in that feeling of, okay, there's a lot going on here at the moment, but also with that added complexity that comes to that side. When we talk about that, particularly from a financial crime and fraud prevention side, yes, there's new offerings, there's new innovation, but at the same time, you've got more attack surfaces. So we are seeing that rise in things like fraud that's coming along, and they're using advanced technologies. They've got more points to proliferate those attacks against. So that creates that, and that's just in the payment space. If you look at the actual financial crime and fraud prevention more broadly, that's the same there. The pace and complexity of change in the last 2 years, I would say, outstrips what we've seen in the last 5 to 10 years quite easily.
Yeah. And you talk about this pace of change, innovation. What's driving that from a regulatory perspective?
As I say, I think you've got to look at regulatory and the changes in technology together, really. And I think if we look to the financial crime and fraud prevention space, all jurisdictions share some broad principles. They always have done, risk-based AML, sanctions compliance, transparency across beneficial owners. Those things are all there. But how it's been implemented across regions is diverging. So in the US, very largely prescriptive, and sector specific, and their stance on things like stablecoin and crypto are very different from in the EU. And in the EU, you've got much more of particularly with AMLA, there's more centralized supervision, and again, where they're trying to harmonize the standards that are there. And very much on the real-time monitoring. So you've got that very difference from the EU and the US. UK, post-Brexit, it's still very intelligence-led, risk-based approach, but really, from the FCA and the NCA, so the National Crime Agency and the Foreign and Commonwealth Office, we're dealing with their guidelines as well from that side. So you've got that difference in that. You've also got, I'd say, if you looked at sanctions, you've got this kind of post-9/11 divergence or fracturing of consensus. After 9/11, there was consensus of how sanctions were applied. But what you're actually seeing now is a lot more of that kind of regional views and difference in foreign policy play out in the sanctions regimes you've got. So what does that mean? That means from a bank's perspective that they're dealing with more differences than commonalities across those regions, particularly for the globals, than they've ever had done before.
It's a lot more volatile, isn't it? It's hard to know what's coming next. If I think about some of the sanctions and the changes in regime, the changes in standpoint that are coming from different countries, and then that's when we talk about complexity, that's what the people are trying to navigate. So how do I get my systems, my process, my operations
And how do I change them to make those accommodations? Because it's happening much faster than we used to do. You're now getting executive orders published. Yeah. Things change straight away. Yeah. It's not like we went through.
And you have to respond to that.
You have to respond. Yeah. And that's another area that I'd call out, is the timeliness of response. Yeah. So even though you've got that complexity, there is that drive. You've got to be timely in your response, which you can see is that conflict with there. Yeah. But then we look at the technology changes, and I was going to say a double-edged sword. I think it's actually a triple-edged sword if one existed. Yeah. Because the advances we're seeing in technology provides great, as we say, innovation and opportunities for people to exploit, and as clients, we benefit from that. Same time, you've got the bad actors who are using that technology in more sophisticated attacks at a faster pace than we can respond. Yeah. But at the same time, the actual teams are using that technology to then kind of be more effective in their response. So you've got those three things, and that's if you bring those two things on the regulatory side and the technology evolution, that's where people are really sat today. And that's what a lot of the topics of conversation at Sibos have been around. Yeah, obviously lots of the topics are around those areas, particularly AI when you're talking about technology. How do you think financial institutions should view AI specifically from a compliance lens? Yes, well, I mean, look, we mentioned all those factors, right? And therefore, if you looked at all those factors, what is it the response is going to be? So we just take AI out of it for the moment. Everyone recognises there's got to be a step change. The systems that we've got have got to be much more adaptive. They've got to be more real time, and they've got to change the cost structure. Okay, those three things are what you get out of that complexity. So yes, agentic AI offers that real opportunity. But that opportunity is not just like a bolt-on to what we existingly do. I think you can look at AI and look at it as much more of an agent for a bit more radical change. Get away from the linear workflows or silos. You can now deploy that type of technology right up front in a customer journey, really to identify the risk in faster time than you could before. So, that's definitely what people, you look at every conversation that's been going on the topic, it's going to be there at this conference. That creates challenges. And that has a ripple effect because, yes, you've got your operational control environments that have been stood up over and refined over the last kind of 5-10 years to be able to manage all that, manage within the cost budgets that people have got. But I think that, it's slightly different. Okay, any new technology that comes along, people have beforehand been able to accommodate it within their current frameworks. But AI is very different. So there's many unknowns that we're dealing with. So from a regulatory governance and associated controls, it kind of lags behind the advancement in the technology, because we've seen, you can come to a conference one day and then go to a conference 4 months later, and it's really different. And therefore
that shows the pace of change. That's
the pace of change on the technology. But remember, at the same time, those environments that you've got to then operate as vendors like ourselves, how do you operate with that control and comfort that you need if those things aren't known? And I think that's look. If you, I'll give you an analogy. If you looked at the kind of the changes in previous or big changes in technology landscape we've seen, so SaaS or moving to cloud, right? That opportunity risk trade-off was always kind of fairly manageable. The tech was more quantifiable. It operated within the same risk and control framework. So you could make that analysis and get to a point where you go, fine, we can now move forward. That's not the same with AI. Yes, we've got to embrace it, but it's how do we do that at the speed we're running? Because you don't know all the answers today, and nor do your kind of legal and compliance teams internally. They don't know necessarily the answers. So you've got to operate within that knowledge from that side.
And maybe just one final question for you, Tom. If there was one key takeaway that you personally and LSEG Risk Intelligence as a whole are going to take from Sibos, what would that be?
Crikey. I think if we looked at the kind of conversations we're having on the stand, or certainly the conversations we're having with partners here, I think from our side, we're predominantly a data vendor within this space. If you are looking at deploying AI, there's one truth there, that actually the data that you as a business are using to be able to perform that particular function you need to have control over that. And therefore, there is an implication that people have to consider their data landscape much more upfront in the actual design process. And they've got to really understand, how do I get really good, structured, quality data, but timely? Because it doesn't work if you don't have that flow. Now, previously, data was often thought slightly down the chain. At the end of, I'll put a big platform in, I'll look at the data. That changes. Data forward strategies are now looking and saying, if I get control of the data, then I can deploy the AI on top of it. So that's kind of the one thing that's come out strong for this conference.
But hey, we might meet in 6 months or maybe a year down the line and things will have changed again. So
yes.
Look forward to future conversations with you, Tom. Tom Golding, thank you for joining me on the podcast.
Thanks very much. Cheers now.
Okay, pleased to say that I've been joined by Sulabh Agarwal, Managing Director, Global Head of Payments at Accenture. Good morning to you.
Good morning. Thank you so much. Pleased to be here again.
Yeah, well, this is not the first time we've spoken, is it? We met at Pay 360 earlier this year. We've spoken at Money 2020, so it's excellent to have you on the podcast again.
No, likewise. Always a pleasure to speak to you.
Now, I'm going to put you on the spot first up. I'm going to ask you to look into your crystal ball and talk about how you see the payments landscape evolving over the next, 3 to 5 years. What do you think?
Oh, yeah. Lots is changing, right? Payments is never dull. There's so much change happening across the board. I would start with the customer, right? To the customer, it is going to be richer experience, better experience, more choices. And I think if you look at the experience from the customer itself, it'll be more instant, which anyways has been happening, but even more so from a convenience perspective, because you will have more overlay services, whether it is in form of real-time payments overlay, whether it is in form of programmability from the digital currencies which will come into play, or whether it is you sitting back and letting your agent do the commerce for you. So I think we will see a world where there will be coexistence of a lot of different payment types, commerce opportunities, as well as in the back end, you will have all the rails supporting these different payment types, these different services. We'll see a lot more of programmability come into play, and we'll see coexistence. Because I don't think in payments you get rid of anything really, right? You just add to it.
But yeah, and just picking up that point on the customer experience as well, because I think that's when we're all going to suddenly realise that things are changing quickly when we have that agent doing things on our behalf. Is that going to be coming soon, do you think?
I think so. I mean, you saw last couple of weeks, at least 2 protocols have come out. Google has come out with an end-to-end protocol with like 60 organizations working with them. We've been one of them. And likewise, Stripe has come out yesterday with another protocol. So I think the key is, see, if I as a consumer can see value from an agent doing something which I find hard to do, I'll do it, right? So there's definitely, from a consumer perspective, from a business perspective, you can see that agents would add value. Now, how far the agents go, what permissions you give them, will it be safe and secure? How will you control fraud in that environment? Because, as there are agents, they can do a lot of things, but also bad things. So I think it's about how do you control the experience and make it safe and secure, but there's definite value. Suppose, say I have $1,000 to put in a savings account where I want the best interest rate. And say I define, like, there are 4 or 5 institutions I trust where I would feel comfortable getting my money to be there, because some institutions I may feel slightly more vulnerable in terms of the risk appetite. Then, I can instruct my agent, optimize my savings across those 5 institutions and keep sweeping my, funds. But then it doesn't stop there, because I can ask the agent to say, well, okay, you've got access to my funds already, but then if you see that there is a mutual fund or another thing which is available, you can invest there. But it doesn't stop there. You can invest in a bond, you can invest in gold, you can buy some consumable for me. So I can train my agent, I can give instructions, but how do I do it in a secure way, and how do the exchange of value and the transactions happen in a secure way is going to be quite interesting, and how it evolves in coming times.
I think you're absolutely right there, because it's just the next progressive step, isn't it? You might do all of that research anyway, looking into the institutions that you trust. So you're really just asking the agent to go that further mile, aren't you? Really? Yeah, absolutely.
I mean, maybe not all the research will be done by me in coming times, right?
No, absolutely.
The agent may do some as well.
Of course.
Of course.
What about kind of in cloud infrastructure, AI in general, in terms of the innovation that you're seeing, and how, aside from this agentic AI, how else is this going to change the payments landscape?
I mean, you cannot be in Sibos and not talk about stable coins and digital currencies, and that's another big wave which is coming. I think there is real value you can see with those instant settlement, whereas, merchant today, once the transaction happens, get money much later, for example, if it is a C2B transaction. Similarly, the ability to do programmability in any form of digital currency, whether it's stable coin, CBDCs, tokenized deposit, or other, like essentially your ability to put conditions around it and be able to create conditionality is quite good. So I think that's one topic, if we can spend hours just talking about that. More just cloud and AI. I mean, cloud I'm seeing has become like hygiene factor now, right? Whether it's private cloud or public cloud is still a question, because payments by nature is quite, critical infrastructure, and regulators have a say about it. But I'm also seeing a lot of innovation there, where clients are moving from not just single cloud to multi-cloud payments, infrastructures. And then AI is a big, topic in its own right, and we can spend hours talking about it. But essentially, whether it is, if you look at a transformation journey for any organization as they're going through it, right from thinking about what they want to do, to writing the requirements, to actually delivering the code, to doing testing and implementation, all of that, we're seeing big usage of AI. If you look at operations, there's big usage of AI. And more importantly, in terms of revenue generation, enabling your RMs, enabling your, better marketing, etc. They're all going to be powered by AI, and we're seeing quite a lot of good use cases there.
Yeah. Huge benefits that we can reap, clearly, and that's going to come in the next 5 years, as you've said. What about the flip side of the coin? What are some of the challenges, some of the financial risks that might be here, and how can we best mitigate those?
Yeah, we are already seeing, right? Just real-time payments caused a big rise in APP fraud. The fraud volumes were going through the roof, especially in terms of fraud where people were impersonating to be someone else, right? And or even if they are the same person, like just this level of sophistication in terms of duping someone was going up significantly. It's already going up significantly, and there are lots of big, corrections or prevention solutions which are coming in the market. But also, when you look at the AI, Gen AI, agentic AI, the fraud potential increases big time, and only to add quantum to the mix, right? Whenever the processing becomes even faster, you're talking about much heavier reliance on your security posture, as well as how you are going to prevent some of the fraud which will happen around the world. Are we
equipped to do that, do you think?
I mean, we've seen a lot of organizations facing challenges, right? JLR was the most recent one. But I think most of the financial services industry is pouring in money in security and fraud prevention and AML and the whole financial crime prevention, to look at using the same techniques of quantum AI, Gen AI, and others, agentic AI to say the least, to actually bolster. You just have to be 2 steps ahead of the fraudster or the person who's trying to commit the crime.
To ensure you can fight back, absolutely. Now listen, Sulabh, it's always great to hear your insights at every conference where we go to. Hope to see you again too, but for today, thank you for joining me on the podcast.
Likewise, it's always a pleasure to speak to you. Thank you so much for having me here.
Pleased to say that I've been joined by Elena Philipova, who is Director of Sustainable Finance at LSEG Data and Analytics. Elena, thank you for joining me here today.
Pleasure to be here, and thank you for having me.
No, not at all. So, well, let's have an introduction to ESG and sustainable finance and what you feel that means today.
I think today it really means rethinking your business model for the future, to be sustainable, resilient, and winning business on a go-forward basis. The macroeconomics and really the world around us is rapidly changing. It's being transformed and challenged by digitalization, AI, macroeconomic challenges. So businesses simply cannot be thinking just about the short-term profitability. They have to be thinking about the long-term perspective and how to win in the long run.
Yeah. Do you think that the momentum is slowing a little bit here? Obviously, there are a lot of outside pressures, shall we say, on this kind of area. Do you see that momentum slowing? And is the business case still there?
Yeah, I mean, if again, we go back to what it means, absolutely, it is there, and it's fundamental to any company to, on a go-forward basis, to be thinking about sustainability, rethinking the business model, and not only doing that, but actually collecting the data to make sure that what it's doing is indeed making a meaningful steps in the right direction. The business case is absolutely here. There is a lot of media noise. And that is actually very healthy for sustainability and sustainable finance, because we used to be in somewhat of a bubble over the last couple of years with a lot of marketing, PR. Every company was all over ESG and sustainability, hiring teams, growing and investing, but at the same time not really understanding why it's doing it or whether what's doing has a positive impact. And so we're redefining what good looks like and how to do it better on a go-forward basis.
So actually you think that the media noise, as you put it, is actually healthy because it brings these things into conversation. It makes us think about these things a little bit more?
Absolutely, and elevate the discussion higher up in the corporate hierarchy all the way to the boardroom. And that is, in a way, facilitated and enabled by the growing sustainable finance regulations that we see emerging from all regions and geographies. They are making ESG data and reporting mandatory. And so it is a topic in the boardrooms. And it is really important to continue that dialogue in the boardroom and make it transformative for the business.
Yeah, I guess the challenge is ensuring that it's not just a box-ticking exercise and ensuring that these companies want to do it, they see the clear business benefit and the clear environmental benefit to do it, let's face it.
Definitely, and that's one of the pushbacks we've been hearing a lot about here in Europe with the CSRD, the Sustainability Reporting Directive at the EU, which has been developed for the last couple of years. And in the first wave of companies that reported, a lot of the feedback was that it is a costly burden for organizations. And it is a costly burden if you approach it in a way as a box-checking exercise. If you bring it back to the business and unlock the business opportunities by understanding your risks and managing them better, this is where the strategic opportunities for growth are unleashed. But the timing is challenging, right? Companies do need time to build the capacity to rethink their own processes, obtain the data they need to actually measure, manage, and track their performance over time. So it's that scaling up of capacity that's happening right now.
Yeah, you mentioned data there. You need consistent, reliable data to make this a success, clearly. What gaps do you still think are there, and how should these companies be addressing those?
That's a great question, and there are lots of data gaps, mainly because our industry has traditionally been managed and led by the market, by the financial markets requesting that data from companies on a voluntary basis. And as such, the data sets are relatively patchy. We're a lot better in terms of data availability on issues like governance, board of directors composition, executive pay, and climate emissions. Data, for example, has gone is very advanced, but many of the other sustainability topics and issues are still very patchy. And that's the importance of mandatory sustainability reporting, similar to what the IFRS Foundation has done with the ISSB standards and Europe with the CSRD standards.
Now, you're clearly passionate about ESG, about sustainable finance. What do you see as the biggest opportunities over the next few years?
Get on the journey and scale up capacity as soon as possible. It's very interesting, actually, to give you an example, in some of the emerging markets that my team has been traveling, we're hearing SMEs already are building up the capacity, creating tools and expertise in-house to report according to the new emerging sustainability standards. And we, at home in Europe, are using still as an excuse the cost burden. So we need to get on the journey, get ready, because that's going to be the competitive differentiator for success in the future.
You heard it here first. We need to get on that journey. So good luck with getting all these companies on that journey, because obviously this is something that's going to be fundamental to not only companies, but the future of our world. So Elena, Philipova, thanks so much for joining me on the podcast here today.
My pleasure. Thank you so much.
Yeah, pleased to say that I've now been joined by Toine van Beusekom, who is Strategy Director at Icon Solutions. Toine, how are you?
Not too bad, not too bad. How is it for you?
Yeah, having a really great Sibos, thank you. Yeah, all good. Now, before we get into the interview, could you give me a brief overview of Icon Solutions?
Icon Solutions is originally a consultancy with a lot of background in architecture and integration, but also payments, that moved into a payment solutions company. So now we have a full spectrum of payment solutions for bigger banks that we work with.
Yep. And so from your perspective as that payment solutions company, how are you seeing the ecosystem, the payments ecosystem evolving over the next, 5 years? How about that?
I'll challenge anybody who can think about more than 2 years.
Yes, absolutely.
Well, the interesting thing is that we're now coming to an end of the ISO 20022 regulatory deadline.
Yes.
Right. So that does change the paradigm a bit. So in essence, everybody should be ready, right? And everybody is ready from a facing others, basically. You never know what happens at the core in that perspective, but it also has changed the paradigm a bit that banks now really need to think about and step back. Actually, A, have I built the right thing, right? Have I done it holistically? But B, next, okay, can I now absolutely leverage that ISO 20022 that I've gotten a lot of budget for over the last, decades? Because, people tend to forget that ISO 10222 is not that new. The first SEPA engine was 2007, right? So that journey was a long journey, and it's now, I think, time to step back and actually look what has been delivered and done. And a lot of banks are doing that, and because it is not an automatic now for next year to get budget for the next regulatory deadline, right? They really have to think about, okay, what's the business case here? What comes next? And I think that is absolutely changing. Plus the fact, obviously, that the world has gone real time. That is not something that's going to happen. That has happened, right? So how do you leverage that?
Well, I guess the obvious follow-up question is, how prepared do you think the industry is? And as a follow-up, what are the implications if they're not ready?
So I think that most banks are prepared for today's traffic. If I need to have it in one short sentence, and but we do see that this traffic will absolutely start to grow, right? So there are so many initiatives that point in that direction. There's a lot of also a lot of push to start actually using those rails, but there's things like Wero where the card transactions might move onto these types of rails. There is debulking into single transactions. So the thing is that a lot of these banks have an ecosystem that can cope with 100,000 transactions and 10 TPS. But does it cope with 50 million transactions and 1,000 TPS or 2,000 TPS? And now it is, I've used the analogy of the Warren Buffett quote, right? He says, when the tide goes out, you can see who's been swimming naked. And now it is actually, when the tide comes in, you can see who can't swim. So I think resilience will be one of the absolute key things that to focus on, because we've had a couple of highly advertised outages. And you see that the government and the regulatory bodies are just stepping in, that is key for them to keep up and running.
Yeah, why are these outages happen, in your opinion? And is that going to continue, or?
There isn't, with all of these things, there isn't a single case, right? There are some really great analysis written, for example, for the TSB case, the Slater report that has come out at that point. And it's always a death by 1,000 cuts, right? But it's also... how well is your ecosystem documented? Do you still have 400 apps while it should be 100 apps? Who is owning what? What's your target operating model? So a lot of it is infrastructure related normally. So that is the part where you really have to be mindful of. It's not necessarily functionality.
Yeah. And to look at another threat that financial institutions face, which is, of course, financial crime, fraud, things of that nature. Which of those are toppermost of mind for your customers?
So they are now also starting to see it, which is the interesting part, from a must-do to something that could potentially earn something, right? So because these banks all need to find their business model and their transformation as to who am I, and banks should ooze trust. That's what they're selling, right? Your payments are safe with me, your money is safe with me. And I think that over time, people will start to pay more for more trust in that area. So it's one part of the equation is it's part of a business case.
Yeah.
The other part of the equation is how do you do that in a real-time, no latency world? So if I need to check a lot of things on every transaction, your ecosystem must be able to handle it. Even to the previous point, if the volumes start ramping up, right, and you need to do all the fraud checks, AML checks, scam checks, etc., can you still adhere to those SLAs? And that's something that you really need to architect for.
That's an interesting take, actually, in terms of trust, because that's something we've always taken for granted, isn't it, with banks?
Yep.
And are you suggesting that could now become more like a sort of premium service?
I do think that the commodity side of payments is such a low margin, no margin business that they are transforming themselves more into trust institutes. And also if you say, now we will have stablecoins, how trustworthy are those, right? Do I trust a Walmart stablecoin over a JP Morgan coin? Or you will have all that type. And people really, I think, start to need, and corporates, other FIs, need to have that safe pair of hands where you're going. And so I do think it's going to be a premium service that you can buy into, yes.
Toine van Beusekom, it was great hearing your insights. I thank you for your time and thank you for joining us on the podcast.
Pleasure.
Yeah, I've now been joined by Andrew Blair, who is Head of Global Solutions at Kyriba. Andrew, how are you?
I'm doing well. Yeah. Really, really excited to be at Sibos. It's a big conference.
It's a huge conference, isn't it? Yeah, it takes a lot of walking around here. You definitely get your steps in.
Yeah, I think I got here and then walked another 30 minutes to get down here too. So
that's it. Well, let's start with an introduction to the company. So tell us the problems you guys are trying to solve.
Yeah, so Kyriba is a liquidity performance platform, and really what we're designed to do is unlock, all of the friction that takes place with corporate treasury departments, from getting visibility into their bank statements, to seeing the cash, to forecasting the cash, to moving the money. And we've gone on a nice evolution through that journey. Started as kind of an e-banking platform, and then moved into some of the more nuanced and sophisticated areas that solve those challenges.
Sure. Now you're speaking here, aren't you, on a session which is entitled Treasury Insights: How Corporates Are Transforming the Front-End Payments Experience.
Yeah.
It's quite a mouthful, but I got there. What are the main points you're going to get across in that session?
Yeah, so it's a panel actually with a corporate and a couple of banks, and I think what we're really trying to kind of educate and push through is the importance of the end user experience through the payment journey. So that could be from just leveraging the actual screens within the application, making that information simple to use. But I think it's going to ultimately extend into things about getting the data. How rich is that data? So we'll talk about APIs. I'm sure that we'll talk about AI as well in there, and
might just touch upon it.
And what that looks like. But ultimately, it's an attempt to address the corporate challenges, and that's what we're served to do.
Yeah. Well, let's pick up on AI, or maybe other changes that you imagine in the payments landscape. Things are moving at a pace, aren't they? What kind of changes are you seeing?
Yeah, so I think there's two concepts that will really drive everything. It's APIs and then AI. So APIs, I think, is the new trend of the way to connect into banks and financial institutions versus the traditional file-based SFTP host-to-host connectivity. Everybody wants real time. And what that allows for is corporates to have that information quicker and do things with that data quicker as well. There are some challenges with APIs in terms of the richness of the data. What does it look like? There's been a lot of standardization over the years to address those. APIs has less of that. So that's kind of the next frontier of evolving there. But API is absolutely the first framework, and then of course again AI, and again we can kind of go into that in any direction that you want. But I think AI has a component of machine learning to it that is interesting, where you can take things like your historical payments and see of those payments what potential fraudulent activity has potentially occurred. You can look at things like, are we smart routing these payments? Are we actually sending them through the channels that they need to go in as well?
Yeah. Well, I guess the most interesting thing for me about AI is the transformative nature of it. Obviously, we've seen a lot of transformation already. How quickly do you think that's going to escalate over the next, I don't know what time frame you want to put in it, 3 years, 5 years?
I feel like I've gotten asked that question a few times, and my answer keeps expediting, right?
Which shows the pace of change.
It's really, really interesting. I mean, we launched our trusted AI, our TIE solution back in May, and I've seen the progression even in the first 4 months of that. And so you see some of these leaders with like workflow orchestration, and as the agents start to pick up steam and gather the richness of the data, I think there's not many things that will hold it back. It's just going to be a matter of adoption then at that point, and the trust in the corporates to take that forward.
Now, you spoke about AI helping within fraud prevention. What I'm keen to know as well, are there any emerging risks, any challenges that you see that could really kind of undermine, I guess, the financial landscape, and how do we approach those emerging risks?
I think, the adoption of different currencies like crypto, that's going to increase the required oversight in things like corporate payments. I think if you think about the importance of moving money in the corporate space, there's very strict kind of regulation and oversight required around that. So as we get into new areas of technology and kind of infrastructure, I do think there will be some trepidation in terms of, are we really moving forward with this? Have we thought through all of the ramifications associated to it?
Do you think that's a regulation perspective, that regulation is needed, or is it that we still need that human oversight, that kind of checking process?
I would say both to a degree. I think, there's globalization or deglobalization, and that matters in terms of like the policy framework. I think that there still will be, for the foreseeable future, so you said 3 to 5 years, probably some oversight from a human perspective in terms of moving money. I mean, it's a very sensitive, thing to do. And so I would, be hard pressed to think that gets completely automated with like headless treasury.
Yeah. And imagine a world where we don't need that oversight. Think about how far we'll have come then. So listen, maybe we can pick up that conversation another day. But for now, Andrew, Blair, thank you for joining me on the podcast.
Thanks for having me.
Okay, joining me now is Radha Suvarna, who is the Chief Product Officer at Finastra. Radha, thanks for joining us here on the podcast.
Happy to be here, Graham.
Yeah, it's great to see you here at Sibos. Now, what I'd like to talk to you first of all is about cross-border payments and your thoughts on how that landscape is developing and evolving, and maybe some of the challenges and opportunities there are out there for financial institutions.
Yeah. No, it's definitely a space that's been expanding, and a lot has been happening. I would like to bucket it into two categories. One is continued emergence of alternative cross-border options driven by technology and ISO standards, etc., but also driven by the regulations. What do I mean by that? And let me give a few examples. One is, first, SWIFT works just fine, and it's been serving as well, and it'll continue to serve as well, which is kind of what I would call Horizon 1. And then in the last few years, the Horizon 2 space has been emerging with things like Visa Direct, MasterCard Move, Tunes, and others who are providing alternatives to cross-border, a smaller ticket size perhaps. But that's what I would call Horizon 2, and that's been in the play for some time. What is happening now is what I would call, this is Radha's view of, or the terminology, what I call Horizon 3, where it's partly driven, newer rails and alternatives are emerging. One of them is these regional networks. ISO 20022 is a standard that many countries have adopted for immediate payments. So some of these regions are thinking, okay, can we connect multiple immediate payment rails in countries, interconnect them because they're all on the same standard, and make it a mini cross-border region. Example is in ASEAN, there's something called RPC, Regional Payments Connectivity, where they're connecting Singapore, Malaysia, Thailand, Indonesia, and Philippines into mini cross-border capability where money moves faster without going through the SWIFT, as an example.
Yeah.
And Nordics sometime back has started an initiative called P27, where they were trying to do the same thing for the Nordic countries.
Right.
And recently, Bank of International Settlements basically has initiated an initiative called Project Nexus to connect all these mini regional networks into one.
Right.
That's one option. Now, the second option is stablecoin.
Yeah.
Stablecoin, obviously there's been a lot of news, particularly driven by the Genius Act that's been passed by the US Congress, that got stablecoin into the financial services fold, if
into
you will.
The mainstream, if you like. Yeah.
Absolutely. So that is starting to create, and Circle as an example that we, Finastra, have recently made an announcement with. They have something called Circle Payments Connectivity, CPN. It's a stablecoin based cross-border money movement capability. So that's one. Swift, a couple of days ago, have announced Swift Ledger to bring in stablecoin functionality and technology into what Swift does. So if you think about it, there's just a number of these things that are emerging that are going to create opportunities and challenges.
Yeah.
So that's kind of one view of the world.
It's one of the challenges because there are so many now. I mean, you were talking about 3 horizons earlier. Can they all coexist?
They almost have to, in my view, because, I always say when it comes to payments, there is going to be an evolution. It's very unlikely that there will be a revolution. So there will be a period of time when things will coexist. Like, for example, checks and cards and ACH has coexisted.
Yeah.
They still coexist. So I think it's going to have this multiple generational capabilities will continue to coexist, and that's just the reality.
So with all of this, I don't know, would you call it complexity? Certainly many different options here. How can banks keep up with the pace of all this? What should they be implementing in their institutions?
In my mind, I think it needs to be driven by the customer centricity at the end of the day, of course.
Yep.
In terms of the banks that I have been a banker for 25 years before I joined Finastra, and at the end of the day, the corporate customers and the individual retail customers that the banks are serving, they have to keep them in the center in terms of what is the value that it's creating. So, to the extent there are many options, is that solving for what the end customer is asking for, which is basically speed, cost, and transparency. And we all know that as good as the cross-border payments have been, that is definitely an area of opportunity to create new value, because customers need to know if they're doing a cross-border payment, how much exactly it's going to cost them, what's going to be the FX rate, when is it going to get there. There are ways to improve customer experience. So as long as they keep it at the center of the customer and for a specific use case, use the right rail, I think that's where the banks will have to start thinking about, and technology is just a means to that end.
Yeah. So, well, let's finish on the technology side of things. So, more specifically, what are some of the technologies that banks, financial institutions can employ? I'm sure we're going to talk about AI in a minute. So how are you seeing that evolve?
Yeah. I think one of the main things that banks are starting to look at is how do they modernize the payments technologies and the processing engines that, frankly, I'll put a plug-in for Finastra. That's what we do.
Yeah.
We basically provide payment processing engines for the banks to process all these payments. And they are looking to modernize their payment, those engines, so that they can make them ready for future. So one of the ways that they're thinking about, and Finastra, what we have done is we have taken our payment engine and decomposed it and compartmentalized it to do various things, functional things. For example, when an international transfer needs to happen, they need to check if the money is there in the destination account. If the destination account is the correct one, is the money there in the source account? As an example, we do that. And one of the things that we do is routing. Routing of the transaction for a given need. Money needs to go from point A to point B. Does it need to go on rail 1, which is a domestic payment, or it could be faster payment, those sorts of things. So the banks need to decompose these things, and that's what we have done. We are helping banks to modernize their platform so that they can be ready for it. So I think the short answer to your question, I guess, Graham, is banks will need to modernize their platforms to be ready and to test and experiment with some of these newer capabilities that are emerging, because I think the story just started, and some will succeed, some won't. And if banks can experiment, fail fast, and for them to do that, they need to modernize the platform to accomplish what they're trying to accomplish. I think that's going to be the key.
So it's about having that base really to start with. You've got to have that framework, I guess, before you can introduce some of these AI-driven tools.
Absolutely, because legacy technologies are slow and lazy. And they're not going to be able to adapt to the speed at which things have to move, and they can't have a 2-year project as an example, only to realize that's not the right partner we picked in terms of one of these rails, and then move on to the next one. Especially in this, at least the next 5, 6, 10 years of the phase where things are going to get a little bit more exciting before they settle down.
Yeah, well, we look forward to tracking this exciting period coming up. And Radha, Suvarna, thank you so much for joining me on the podcast.
Absolutely.
Really hope you've enjoyed these conversations from LSEG Risk Intelligence's booth here at Sibos in Frankfurt. And if you have enjoyed the show, please do give us a positive rating or review on your podcast app of choice. And if you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com. You can find me, Graham Barrett, on LinkedIn. But for now, thank you for listening and goodbye.